Good evening, everyone. Time for another silver update. This is the 4-hour chart of silver provided by netdenia.com. You can click on the link below. Again, this is the divergence, MACD divergence I've been following for a while. You can see the bottom we put in around the 26 level and the minor divergence that we're seeing now. Had a nice little spike today. We got just above the resistance point but fell back. So are we rounding up? It appears to be so. Will this mark a bottom? I'm guessing probably 80% chance. My guess is it will. We're crossing the zero line on this MACD. If we pull out a little bit farther to the 8-hour, you can see that we're rounding up on the 8-hour, and then of course on the daily we're just starting to get that attempt to make a touch point on the daily. We're down below the zero line, and we're trying to round up and do something like this. So barring some unforeseen consequences or unforeseen events, my guess is that'll probably play out, and we'll see where the price goes from here, how fast we rise if we get a crossover. Let's go over to the questions of the night. There's too many questions to cover, so I'm just going to pick 3 of them. Let's start with the first one from BVBLY62, and that's about silver mining. And he says, enjoy the blog very much. Silver is currently mined as a byproduct due to the low cost of the metal at the moment. However, when we see silver get into the $100 range, wouldn't then the old silver mines be placed back into production? I live in Colorado, and we have a lot of dormant mines, even a town named Silverthorne, based on the amount of silver they were pulling out of the mountains in the late 1800s. How do you see the silver bubble playing out? Will there be a rapid spike followed by a rush to activate these old mines, and then a collapse of the price, perhaps back to a mean as supply begins to meet demand? Interested in your thoughts. Well, that's true. There are a lot of shuttered mines in the U.S., but you have to keep in mind the fact, as Jeff Nielsen has pointed out, and we're going to get to Jeff Nielsen in a little bit, but as Jeff Nielsen has pointed out, the byproduct issue is strictly a function of price. So the reason why silver is mined as a byproduct is because the price of silver is too low. So if we get a $100 price target reached for silver, will silver begin to become the primary metal of many of these mines? Yes, it will, but you have to remember that that's going to be the mines that are already in production, the mines that are already mining silver. As far as the turnaround times for mining, they're very, very large. You're talking a number of years. Some have estimated as high as 10 years. I think that's a little bit too pessimistic, but still maybe 3, 4, or 5 years is going to be a turnaround time. So if we just happen to see that, let's say we had some tremendous run like we had in the QE2 run to $50. Let's say we had that and we reached the price of $100 by next March. You'd still be looking at a 3, 4, and 5 year turnaround time for any of that silver to come into production due to a number of things. These shuttered mines, such as Silverthorne and others, you're going to have all new equipment in place. You're going to have all new people. You're going to have exploration and assessment done. So there's a very large turnaround time in mining, any type of mining, and it just doesn't snap as the price rises. It's a slow lead time, slow reaction time. So if we do get the whatever action that causes the price to rise to $100, you could expect that whatever that is would continue as the lead time on these is working. So that's really not a big fear for a lot of silver coming online due to a price spike. Very inelastic. Next one is from Wayner and that's taxation of precious metals and gold. Hi, Brother John F. and all. I've been wondering about taxes in regard to precious metals lately. Most of my PM holdings are in silver. I thought about picking up a relatively small amount of gold in case it rises before silver, and had the following thought. When things go sliding down the tubes, I can see taxation of PMs over a certain dollar amount becoming the latest solution on the part of the government. Also, the issue of reportability to the government will be a concern. Barring the black market route, I would appreciate your thoughts on this. I've been thinking of buying smaller amounts of gold, like the 1/10 ounce coins, paying the higher premium now and hoping that it will keep me off the radar screen when it comes time to sell. As so many others rightly say, thank you so much for all you do. Peace. Well, if you watch my Office series about selling your silver, you'll know that I've talked about the demise of the dollar and the rise of the next currency. Whatever that's going to be, we don't know. We don't know if it's going to be a very strong Chinese currency, if it's going to be an SDR, it's going to be some kind of digital currency. We don't know what that's going to be, but there's really no reason. If you remember on the Office Series video, I covered the Weimar hyperinflation and how those who sold early, just 6 months, 8 months, 12 months before the top, there was actually a 99% decrease in the value of the cash they received. So people who made 10,000% gains in precious metals, if they traded out of those into cash, they were wiped out 99%. So it's not my opinion that it's in your interest to sell your silver or gold for dollars, but for the next currency that comes out. Now, how will the authorities translate the taxes across a new monetary system? I have no idea. I'm not selling any silver right now, so it's not a concern of mine. And the last question we'll take is from Mr. Silver Goldman, and that is gold to silver ratio 10,000 to 1. Hi, Brother John F. First, want to start by saying thank you to all your viewers for taking time to post questions and gather your feedback. In addition, thank you for giving us precious metal stackers something to appreciate and think about in our daily life. My question requires a little bit of digging. However, I saw on YouTube a short video by the Silver Futurist called Gold-Silver Ratio 10,000 to 1, and here's the link. More importantly, within this video by the Silver Futurist, he talks about another video which was done by FOFOA. And in this interview, FOFOA and some government attorney who talks about silver selling for $5 an ounce and gold selling for $50,000 an ounce, causing the gold to silver ratio to sit at 10,000 to 1. I was disturbed by this because the FOFOA blog, many bloggers such as Turd Ferguson, Da Vinci, Silver Futurist engaged in talks along with FOFOA and this government attorney whom referenced your name in a manner saying how BGF followers are going to be upset when gold takes off in value, while silver will fall in value due to the lack of industrial demand when the currency falls. Silver Futurist and Turd Ferguson felt they would like your opinion. To be honest, I would too, if it's not asking too much. Well, very good question. That's a big concern for a lot of people. So let's start out with the silver chart. Let's just get the silver chart out to the weekly. And yeah, we can use the weekly. And let's go ahead and do an overlay of the gold chart over the silver chart. And we'll do a overlay so we can adjust the time frame. So you can see on this chart that gold and silver are pretty much joined at the hip. Gold is the stronger cousin. You can see that on the big financial crisis in 2008, silver suffered a worse fate than gold. You can see just by the slope of the descent of silver that silver went down at a sharper rate than gold did. You can also see at the smackdown, the May smackdown, silver came down at a much sharper rate, gold came down at a less sharp rate. But nevertheless, in the long run, silver has tended to mirror gold. You can see the catch-up period here. This is after the financial crisis. and I'm expecting something similar. So it's really not rational to argue that silver is going to go down relatively while gold goes up. First of all, because there's nothing that gold possesses as far as a intrinsic nature that silver doesn't. It's true that you can find coins that are at the bottom of the ocean, gold coins that are at the bottom of the ocean, and they're pristine. They have no tarnish at all, whereas silver coins can tarnish. But other than that factor, there simply is no other factor that distinguishes silver from gold. And of course, that's the reason why silver has always been money, just as gold has always been money. They share all of the qualities that money has, except for the fact that silver has been demonetized. Now, silver has not been demonetized because of some intrinsic nature that it has, except that it also has tremendous industrial applications. Now, gold has tremendous industrial applications as well, not nearly to the extent that silver does, but it does. So, how would it be that this added benefit that silver has, industrial applications, would be a negative for silver? I don't see that argument at all. And the next point in this article, of course, it's talking about FOFOA, and I've spent a long time, a large number of videos that I've done refuting FOFOA and his arguments. And really, when you boil them all down, when you look at the anti-silver FOFOA arguments, they really come down to some vague threats and some strange stuff that really doesn't make a lot of sense. So I really don't see the basis for any of these arguments. I don't understand how you can argue that gold is going to go to the moon and silver isn't. And then the other thing that I would say is that this is one of the big things that is a failure of the analysts. I'll call this the Western bias, and that's this argument that silver is going to fall in value due to the lack of industrial demand. Now, that is a typical Western-centric view. The idea that the U.S. and England and other Western nations determine the value of industrial commodities, and that's just simply not the case. China is the key player in the value of industrial commodities, and China needs silver now more than ever, and of course in the future they're even going to need it more. So I don't see a depression in the United States really having much impact on the price of silver and the industrial demand for silver, because I think that China is probably going to turn towards the inside as far as markets go and begin to develop internal demand. Again, that's 1 billion people who all want cell phones, all want iPads, all want HD TVs. These are all things that modern industrial nations want. India, again, is another, not to mention South Korea, Taiwan. The Philippines, which is growing rapidly, is going to want those things. Indonesia. And so the growth in demand for silver will continue regardless of what happens to the United States, Britain, and even the EU. Even if those economies turned into the Japanese 3-decade stagflation situation, I don't think that would even have even a small impact on the demand going forward for silver. So I think in both cases these arguments fail. There's really no merit for them. It's just a Western-centric bias, and silver has all of the benefits of gold plus this demand. And of course, for the conspiracy theorists, the tinfoil hat people, the Charles Savoy followers, if you do the research, if you look into the history, you'll find that it was a concerted effort by these powers to demonetize silver because they recognized the coming industrial demand. If you look at the Silver Users Association and the reasons why they have created a cartel to suppress the price of silver, it's because of this industrial demand. They recognize that silver cannot afford to be both a precious metal for investment and an industrial commodity at the same time, or its price is going to explode. And again, that's what this channel is about, to remonetize silver, because silver is the people's money. And I believe as the people remonetize silver, we will not go to a 10,000 to 1 ratio, but we're actually going to a 1 to 1 ratio. Now, let's get over to the main story of the night, and that's going to be this Jeff Nielsen article. The reason why I think this is important is because Jeff Nielsen really is a person I greatly respect as far as understanding the silver suppression story, also the gold suppression story, and the machinations of the Western governments to try to suppress the price of silver. But this article that he just posted today, Prosperity Index shows capitalism kills, and I'm going to read just a little bit of this to try to refute. I don't really understand where Jeff Nielsen is coming from. It seems that Jeff Nielsen believes that there's a type of socialism for the little guy that is a good thing that we can pursue. But I think that if you examine history, you'll find that socialism always ends up in dictatorship, and I think we'll see that when we look at the facts. So let's get down to the core of the argument that Jeff makes, and that's about how this social index, which, by the way, I don't place a lot of stock in. I would ask, where's China in this index? But so this is something put together by academics, and I really don't put any stock in their conclusions. But what I want to point out is the complete misunderstanding of what capitalism is by Jeff. So let's look at the conclusions here. However, it should be pointed out that there is an alternative means of interpreting the U.S.'s decline in global rankings and overall 12th place ranking. While the U.S. ranking has been falling, social spending has plunged at the state and at local levels. Handouts to large corporations have increased, corporate profits have increased, and while average wages for the little people continue to steadily fall, for those at the top, wage increases continue to rise exponentially. Well, I have to say, first of all, for those at the top, are we talking about government workers? Because the disparity in wages is largely the difference between people in the government who are paid by tax money and people in the private sector who are paying those wages. We'll continue. Taxes for those at the top remain at all-time lows. In other words, by any and every definition of the word, the U.S. has become steadily more capitalist over the past 3 years, yet with 3 years of economic recovery and 3 years of the West's most extreme version of capitalism becoming yet more extreme, the net result has been a significant overall decline in well-being and the immediate prospect of further deterioration as indicated by the decline in ranking. So this is the core crux of this argument, that the West, the U.S., has become steadily more capitalist, in fact, to an extreme, the West's most extreme version of capitalism. So let's examine this and understand what capitalism is. So let's just get back to the basic core understanding of what capitalism is. Capitalism is the idea that by the use of capital, the general overall wealth of society will increase. So we have to look at what is capital. Capital is the amount of savings in a society. In other words, the way you get capital in your society is if your citizens put aside the amount of money or wealth that they receive through wages or through profits, if they're middle class or upper class, the amount of money they save above what they spend, if they take that money and they invest that money in productive enterprises that produce profit, then they become more wealthy by doing so. So The essence of capitalism is to save capital for investment purposes. So if you're going to talk about capitalism, then the key thing you need to talk about is capital. And the way you get capital is through your savings rate. So if we wanted to describe which countries are the most capitalistic, we would have to say that those countries where the most capital is set aside for capital investment are the most capitalistic. So this is what exposes Jeff Nielsen's argument to be something that just uses euphemisms and doesn't understand how economic systems work. By far, at this point in time, regardless of labels that anyone uses, the economies of Asia are the most capitalistic economies. Because in China, the savings rate in China is roughly 40 to 50%. In other words, the citizens of China save almost half of what they earn and invest that money. That is capitalism. Now, let's compare that to the United States of America. The United States is run primarily by Benjamin Bernanke, the chair Satan of the Federal Reserve, who has done everything he can possibly do to destroy capitalism. He has made it so that there is a perverse incentive so that anybody who has savings will not save it and invest it, but will spend it. In other words, there's no benefit to saving money. And in fact, the West has operated, the United States and Britain and Europe have operated under this model for the last 3 or 4 decades, where they are of the opinion that the worst thing that can happen is have a slowdown in spending. So they try to encourage spending as much as they can. They try to discourage capital formation. So capital formation is the essence of capitalism. If you don't have capital formation, you don't have capitalism. And on that topic, if we look at the players in the West who have been rewarded unfairly, the large corporations, the large banks, these groups have been given money from the taxpayer coffers to bail them out, to play financial games and other things. This is the type of crony capitalism that is not real capitalism. So what Jeff Nielsen is actually criticizing is crony capitalism. Now, I think we'll see in the long run that the heroes of this type of benchmark, whether it's Norway or these other countries, are actually going to end up being blown out of the water by the Asian economies, the true capitalist economies of the world, who are growing from 7 to 10% every year. Admittedly, countries like Norway and Iceland that are kind of semi-socialist countries have done well because they don't have the utter corruption that exists in the United States and in Great Britain and in the EU. So yes, those countries are going to do better because at least their socialist governments reinvest their monies into some type of productive enterprise as opposed to just spending it on their cronies or giving it to banks. But the fact remains that capitalism is about capital. And so if you want to know which countries are the most capitalistic in the world, you can't look at the titles, you can't look at what they're called, you have to look at the percentage of savings in those countries and how that savings is reinvested. And it's very clear when we look at those numbers, we find that the Asian economies are the most capitalistic economies in the world today, and of course they're the fastest growing. So the problem is not capitalism, the problem is crony capitalism. Of course, it's the crony capitalists and their minions who are currently suppressing the price of silver because they know that when the price of silver explodes to the upside, it's going to be a crisis of confidence in the US dollar. Gold and silver are going to go up together. They're going to skyrocket on the next move. And at that point, the crony capitalism of the U.S. and the U.S. Federal Reserve will be exposed for what it is, which is a gigantic financial fraud. And at that point, hopefully, what is discredited is crony capitalism and not capitalism. And we'll talk to you next time.